Hi, everyone. Welcome back to the InvestBall podcast. Today's guest is Tim Welsh. Tim is the president of Nexus Strategy, a leading consulting firm helping advisors grow their firms. And prior to that, Tim has helped launch the practice management division at both Merrill Lynch and Schwab. Tim, thanks for joining us today.
Thanks so much for having me. Look forward to our conversation today. I think we've got a lot to cover. Yep.
So, Tim, I know when we first met, you were talking a little bit about your background. I'm curious how if you could touch on a little bit on that background and how it ended up evolving towards Nexus.
Yeah, I mean it's a great story. Somewhat similar to a lot of other folks. Started Merrill Lynch in the '90s, and you mentioned practice management, and what we were doing there really was try to change the culture. Move these advisors away from dialing for dollars and stock picks of the day. It really was Wall Street, as Wall Street has been known for. But our message, our methodology was something called financial planning. No one really had embraced it yet. Then they were brokers, and so just by adopting, client focus, planning for goals instead of performance on investments, really changed the dialogue and the tone. And by the time I left in '99, we had about 3,000 CFPs there, so they embraced it. So doing that, hard work of trying to change an advisor's approach to their practice really set me up for success, I think, because we looked at the industry, we saw, well, there's a great movement to independence. Being able to define how I want to work with my clients, and the technology had changed, and this company called Schwab had built a back office for these advisors to be able to plug their books into and take care of all that sort of back office stuff. And we realized then that we had a great opportunity to do the same thing, which was help advisors build better businesses. They're fantastic relationship people, fantastic at working with clients, but they weren't always the best business owners or entrepreneurs in terms of being able to build a successful organization. And we just sort of surveyed the best firms there, got a codicil of best practices, and tried to evangelize that through the ecosystem that supported it, independent advisors at the time. And it occurred to me then, while we were building this whole practice management message, how to run a better business, how to be more successful, really was an opportunity to kind of like spin out my little consulting group I had at Schwab and do that for everyone else in the industry. I could also become independent. I could also sort of, drink the Kool-Aid that I was pouring. And it was a fantastic move. Being a consultant has really, I think, been a personal fit for me. I was never going to be the SVP of anything at any of these corporations, so need to find something else to do. And so it really turned out to a great opportunity to then take all that great knowledge and experience working with the best teams in the industry, and then be able to help other folks to kind of bring that to market. We really looked at sort of the technology ecosystem, the wealth management platforms. Everyone was trying to get a leg up on how to offer their services to advisors. We knew how to do that, and that was sort of the core tenet of what we do as consultants. So yeah, I look back and it was not exactly by design, but definitely, where we ended up was a fantastic place, and I'm excited to be here and love to share all those great insights and what to do, and most importantly, what not to do. So thanks for having me on the board.
Of course. So I guess as you raise an interesting point. What do you think was the key enabler in the industry for a lot of advisors to leave bigger firms and go out on their own? Was it like technology driven? Was it like a change in regulation that really helped shape the independent space?
It really was. It's the evolution of Wall Street. I mean, Schwab was brilliant in being able to, in 1975, create a discount brokerage and DIY, and then it became almost by default a wholesale, broker dealer, if you will, for the independent advisor. When they looked at the history books will show that when Schwab looked at their account base and said, "What are all these power of attorneys? Who are these people? We didn't even know we had them." And those were the independent advisors who were using Schwab as their back office, their mutual fund marketplace. Very crude, spreadsheets galore, monthly reporting, manually typing in statements. So it really was the onset of the internet, being able to download that stuff electronically, digitally. Now, all of a sudden, as an advisor, as independent, I had my own back office. I could rent Schwab's broker-dealer operations. I could rent that and use that, and it was a great way for me to be able to do that. So absolutely right, it was a technology breakthrough. It also was sort of how business was done. Again, the DIY, the the case of having a mutual fund warehouse and supermarket, so I could go pick my five favorite funds and allocate to them, and use some basic rebalancing technology, and all of a sudden I was in business. And Of course, then along the lines, we had that shift from the desktop to the cloud, accelerated everything. Before it was desktop software, and they were manually downloading data every night, and it was just a real slowdown in the process. But once the cloud happened and that stuff became instantaneous, I no longer had to do reconciliation. I freed up my office by 80% through just those two technology developments, which then, of course, opened up the world's our oyster. And now you can become an independent advisor with a laptop and a MacBook Pro and an iPhone, and you're in business. And so the barriers to entry went way down. So that also accelerated the growth. So I think that those two things right there were really instrumental in creating this whole new segment of being a financial advisor.
Okay, interesting. And I know along with that has driven the wealth tech ecosystem to, I mean, if you consult the Kitsy's map, to like 400 or so, I forget the exact number, but like several hundred independent or point solutions, also with the broad encompassing platforms like InvestNet. I'm curious your take on the tech evolution in the advisor space, and where some gaps are still left around that advisor's tech stack.
It also comes, again, the origin story of most independent advisors. They came from somewhere else. Barely you come out of college and start your own RIA, and you're 23 and 24, and you're also taking out $1 million accounts, and you're doing it. You typically came from somewhere else, and from somewhere else meant you were an employee, and from that means that whatever program you're a part of, or broker dealer network, or wirehouse, or bank, they gave you a tech stack, and it was all one user interface. You just typed in, you did all your stuff, and you suffered with really ancient, creaky mainframe stuff for years. But then you unleash Pandora's box and say, okay, wow, you can have anything you want. And you can have a rebalancer from over here. You can have a financial planning tool from over there. You can have a CRM from here. You can overlay it with your own optimization spreadsheets. You can also then go get some really cool PowerPoint graphics and have somebody do your presentations and your proposals. And that is awesome. And that's great. And that's very innovating. But all of a sudden, guess what? Now you've got not a tech stack, you've got a tech pile. And that does not work very well. If you want to grow and scale and become more efficient, you can only handle so many accounts. So that sort of unleashing of the specialized applications really was what I think also drove the interest in the ecosystem. As advisors became more and more successful, as they grew faster, everyone who wanted to be in the tech game with them, most entry points were one point of use. Like I said, just a specific, all we do is performance reporting. That's it. And we do some billing on the side. That's all we do. And we're great at it. And so you can access us. And then we'll try and integrate with your CRM, maybe in your risk number. So you can have somewhat of a Frankenstein thing going on. I think that proliferated. Again, there also was this whole consolidation where you mentioned InvestNet, you mentioned Orion, who started acquiring these firms. And so all of a sudden the entrepreneurs on the wealth tech side said, hey, I can go in here, I can build a great business, I can monetize it, and I'll make millions. And that drove a ton of folks with just a sort of I can solve this component of wealth management value chain. Let me in. And of course, there are no barriers to entry. Come on in. TD Ameritrade at the time with Veo said, we'll integrate. Here's our whole account base. Here's our APIs. Go for it. And it really drove an amazing amount of choice and flexibility for advisors. But at the same time, you mentioned that Kitsy's map. I think there's 435 actually on there, which is now unwieldy, right? I mean, how can anybody make any sort of decisions based on that thing? I know all the wealth tech folks, they say, I want to be on it because I want to be in a category. I want to be known. This is how I'm going to be marketed. This is how I'm going to be found. But again, at the same time, you're seeing a whole kind of maybe, best in breed is awesome and your integrations sort of worked. But, let's go back to where I was, right? When I started, I had one desktop. I had one screen. I logged in. Everything was there. My clients, my tools, everything was done. That sounds pretty interesting to me now because now I have a whole person dedicated to keeping track of that text pile that I built. And again, back to our earlier premise, advisors are great at relationships, great at talking to clients. They're not very good at being IT CTOs. They just don't have that skill set. So sort of like, my golf shot starts out straight, time it lands, it's 3 fairways over. It sounded really good early days, but then it just becomes such an unwieldy thing that now, I have to fix that. It's very fragile. Anything could break. I'm dead in the water. So there's anxious nervousness. So I think, yes, the innovation and the open choice and the open marketplace definitely help proliferate. But I think advisors are still looking for maybe that central source of truth that they can then build on and sort of hopefully let the other platforms catch up. And or in the case of Orion and ResNet, just start buying all these pieces and you stitch them together instead of letting me do that. So I think that's kind of the evolution. So to your point about the opportunity, still wide open. No one solved it. It's still glory days. If you've got a cool app, I think there's more than enough interest. And again, the the innovators, the early adopters are in the independent space, because they can do anything they want. They have no restrictions. If you're a broker dealer or a bank, wow, you got a committee. Oh boy, compliance. All of these regulators looking at me. Oh my God, I have to serve 1,000 advisors. I have to manage the lowest common denominator. That means I got to turn off all the cool stuff and not let anybody commit fraud. That is not recipe for innovation. That is recipe for stagnation. And again, why the independent space is growing so fast. So we could talk for hours on the same point here, but definitely think to your question, tons of opportunity for somebody to still figure it out.
What's interesting is, the Kitties map is very over burdensome right now. And to your point, there's too much choice almost on it. So I agree with you that there seems to be a pivot back towards a central point of solution. However, you see the likes of Orion, who I think came out like a month or two ago, saying they're going to start breaking up their tech. So I'm curious what you think the middle ground is on that. Is it like the CRM is the source of truth, and technology providers should really focus in on integrations into that hub, or is it going with like an all-in-one tech stack?
What you bring up there is just fascinating because we've studied it and we've actually worked on some of these big projects where the custodian will say, hey, you know what? We're where the account is, where the money is. Why don't we give you software? We'll give you tools. So then you will want to come and work with us, and I can use that as a competitive differentiator. And that sort of technology weapon became almost amazing on PowerPoint. Look at this. We'll do all this stuff. But the fundamental premise of an independent advisor is that they will unbundle your bundle every day of the week. They just will, because you'll say, oh, I've got this CRM, this planning thing, this performance reporting, and this rebalancer all in one nice little unified thing here. And they say, yeah, but can you take that one out there and put mine in there? And they said, well, no, it's a bundle. And they said, well, I don't want it then, And so they never ask those questions. Do you want a unified stack? Yes, I do. Will you pay for it? No, I won't. Because I still want to do my own sort of thing. So I think that's sort of the outcome of advisors being eclectic. People used to say, if you met one advisor, you met one advisor, because they're all different. And it's not homogenous. Yes, they are doing the same things, but because they can do it any way they want, they typically do it very differently across advisors. So trying to get a critical mass of people who want to do the same things, I think is very difficult. It's absolutely possible for sure, and we'll see it again. I think the pain points of, if I'm going to scale, if I want to get beyond 100 million, if I want to have more than 50 clients per advisor, we have to do something. So I think that is really going to drive it forward. And again, this industry was very young. I mean, you look at accountants and lawyers; they've been around for 300 or 400 years. You could argue we've only been around maybe 30 years. And so is that not unusual until that premise of advisors being business people, then they'll want to do it. Because some are like, you know what? I know I'm inefficient. You know what? Your new account app technology thing really sounds good, but we open 5 accounts a year, so we're okay with pen and paper. It's and that kind of goes to the whole consolidation of the industry itself. If advisors buying retiring advisors, I think that will then drive also the tech sort of not consolidation, but definitely there'll be much more concentration in certain aspects of it.
Interesting. Okay. And so what we've noticed, to your point before, it went from a stockbroker towards this wealth manager mentality now into this like financial planning inning, I'll call it. And we're shifting into a financial coach sort of model where you're really, that background person running all of the finances, whether that's estate planning, tax planning, every little facet of that individual client's financial life you are somewhat responsible for. Where do you think the area of opportunity is on the tech side? Is it on that client relationship management side, or is it somewhere else that tech today is not really addressing?
that's also another reason I should have mentioned why the proliferation of software tools are out there is because what you just said. I'm no longer just running the money. I have to worry about your your estate plan perhaps or other aspects that would require another tool or another way to see those assets in that light and be able to plan for you. So I have to expand my technology footprint. Also, is the reason why it proliferates. But yeah, I mean, personalization at scale. I mean, we'll talk about. I'm sure when you ask me my two favorite letters in the alphabet, which are A and I, um, how that's going to help. Uh, but again, premium pricing. If you look at the P&Ls of the advisors, even the solos are really high profitable. But once you get to a certain point, the service creep that you just mentioned is going to come in, and now I have to do more of this because you know what, the guy down the street's offering it. So crap, so do I. I never knew what an estate plan was. I mean, I'm a money person. Holy smokes! Now I have to hold. If I want to get the 10, $20 million accounts, I need to offer that stuff. So I think it'll definitely be segmented, and I think we'll start to see those populations. But yeah, there is more advanced wealth planning tech that's available. Again, how do you integrate it? How do you consolidate it? I think that's still open for debate.
Right. Okay. So on that note, we'll get to your two favorite letters of the alphabet now. I've noticed, like we've been applying AI in some use cases, and I've noticed a lot of the low hanging fruit that gets talking or spoken about quite a bit is on, meeting note takers, other, I'll call it, chat GPT wrapper sort of products. Where do you see the need around AI for that advisor's practice the most?
I think right now you're right. The two use cases are in meetings, and the other one is marketing. You can use it to go out there and help you optimize your client list, or go out and help find clients. And of course, just generating content, for your website or for your blog. You can really save yourself hours when you had to sit there and blank screen and try to type up something about a Roth IRA conversion. You could do that in 9 seconds, and that is amazing. And so I think that'll help advisors a lot on marketing and meetings. And of course, it is the most mundane aspect of all, to me anyway, of wealth management. Now I got to sit with my client, got to talk for an hour. Holy smokes, there's like 9 things we have supposed to do. Who's taking notes? Who's got that? Now the AI bot, Copilot, can sit there and that can take care of that and summarize it and send a nice template email, and huge productivity. So right now, AI, I think, is just in that productivity bucket. But of course, it's going to get better. I mean, when the internet came out, I'm never going to give the internet website a credit card. Heck no, I'll never do that. You know what? Or, my mom told me never get in a stranger's car. I'll never do that. Guess what? Uber, or, Amazon, they are just massive entities that broke down those sort of mental barriers. So as advisors kind of get through it, this whole machinations, again, they're regulated industry. They're conservative by nature. They're not early adopters. I think once they start seeing the power and impact of these two basic things, meetings and marketing, then they'll go, well, what else can I use it for? Oh, you know what? This planning aspect, reading some tax forms for me maybe, or do some OCR. It has amazing opportunities. Again, we know from the robo-advisor failed experiment, great beta test. People are funny about money. They're not going to give $1 million to a website. When the cost of being wrong is high, you default to a professional. I mean, that's why TurboTax or LegalZoom never put the attorneys or accountants out of business. When people are worried, like if I do this thing wrong, I could lose tons of money, or I could screw up my estate, or my clients don't get inherited, I'm going to go find an advisor, and I'm going to have that person help me. So we know that to be true, even through the robos and the robots and all that stuff. AI is the same thing. Will you be tagged? Maybe a preliminary. When you go to the doctor and they have the nurse practitioner come in and ask you all the questions. Maybe that could be an AI bot. Same thing for an advisor. Maybe that AI bot could be the one who gathers all the data, consolidates it, and I walk in. I say, "Oh, wow, okay. Looks like you need these 4 things." Massive productivity. Will I build a relationship with a client by just showing them my form and my iPad? No. It's going to be over coffee or over lunch or whatever it's going to be. So I think the role of the advisor, and you mentioned it, financial therapist maybe, or coach, because there's no way a human can optimize a portfolio better than the computer can. I mean, there's just too many calculations and too many CPUs needed, and your spreadsheet that you're using manually, you can only do for 6 clients. That AI powered optimizing engine could do a 10,000 clients in 6 minutes. That's how it will change. And again, it's all about productivity. All the surveys show advisors spend half their time in the back office, which is not, again, not their skill set, not what they were trained to do. But because they have their own businesses, and again, they have their own P&L, they have a business. I think that aspect to pull them out of that's what AI is going to do. And it's going to be amazing. We've seen hockey stick growth in this industry. We're going to see another one, I think, when AI really becomes part of the ecosystem, and advisors trust it. They know the data's weird. What's it doing? I still have to look at it again. I'm not going to automate everything. I'm always going to say, okay, get to the 1 yard line. Okay, let me look at it. Okay, yeah, good. Now send it. But that'll be sort of, again, all these barriers to progress will always be there, and they will be stepped over as people get more comfortable with it. That's just human nature. And so, in the meantime, opportunity for Investable. I mean, go get them, guys. Yeah.
Thank you. Yeah, it was funny. I had I've had two stories. One advisor was like, "Hey, Cam, I know ChatGPT came out. How can I use AI to help me in my practice?" And like they're kind of in that discovery mode. And then I spoke actually last week with an advisor who works at a wirehouse, and she mentioned that they're using like next best actions, so like a form of, I'll call it very light AI, but it creates a summary of all the tasks I have outstanding for a client coming now from the time of filming into year end. So here's all the, I have to generate a tax form, I have to do tax loss harvesting, et cetera, et cetera. So it's been interesting to see kind of the two personas. The one at a very big firm, that big firm's already leveraging AI to help with automating the mundane tasks. And then you have an independent guy who's very much in the camp of, I know I probably need to pay attention to this. I don't really know how to leverage it within my practice yet, but I want to. And is it very much in that early adopter mentality on like, where can this exactly help me in my firm?
Exactly right. And I think they need to see it, play with it. Again, they're sort of on the forefront anyway. If you're stuck in a warehouse or a bank or whatever, you're an employee, you get what you get. There's not much you can do about it. If they're going to give me a little bit of AI, fine. But really, the independents have the opportunity to experiment. And, there are tons and tons of firms out there that are saying, you know what, I'm good. I've got this, Pat. Like I said, I get a raise every year. The market goes up 15%. I'm growing. I'm not really growing, but I'm growing in my mind because the market's giving me a dividend every year for the last 25 years. It's hard to beat that. That's the real challenge, I think, is the mentality. They've been supported with this market growth through the years that have really helped them to get past some of these barriers. But again, it has to be the mindset. I think it's going to be G2, the next generation of advisors in those businesses who say, hey, you know what? I want to step up. Look at these great tools. That's what it's going to take. And then, or of course, you just may see these massive consolidators come in and say, hey, you know what? I get a 20x multiple on my assets. You get a 4 on yours. Let me buy yours. And also now I get 20 on mine all day long. They'll do that. And of course, they'll pay up for it. And that demographic shift. So many variables cooking along, but I think just this big blob of mess of independent wealth management, it will roll forward and we'll get there. But it's going to be messy in the meantime.
Of course. I guess, so one final question. You spent 30 years in this space on helping advisors become more efficient, practice management, what have you. For any advisors just starting out, whether they're leaving and breaking away and going independent or just getting into the industry, do you have any advice for them on what they should pay attention to early days to scale up that book and get beyond the 20 or 40 or so clients that is typically the plateau for them?
Yes. You know what? Don't have more than 2 models. I know you want to have all this stuff be personalized to the nth degree, but when you bring complexity into your office like that, and all of a sudden you have to struggle with every single individual client becomes a puzzle to solve. That's not how the big firms have done it. And yes, you can personalize it through the AI, through having, a values-based lens on investments. There's so many tools out there, but come at it with a very simplistic approach. not try to be all things to all people, and just become just an incredible relationship person as you already are, because otherwise you wouldn't want to be in this business. But do not have more than one or two different approaches to your client base. And that also then itself says, okay, who is your client base? What is your niche? You're one person starting out. You can build your own book inside of somebody else's practice, your own, own business inside there. So, we focus on physicians who've just sold their business, in Northern California. That's all we do, because we know everything about them and how to do this transaction. I got this really cool deal lawyer down here and over here. I refer to them, and we're dropping, 6-figure, 7-figure accounts all day long, because I can use the AI and to go out and say, hey, AI, go find all the physicians who sold their practice in Northern California, and then send them a little text message saying, hey, would you like to work with a wealth management firm that does this for a living? Sign up get a calendar appointment. Boom. All of a sudden, you are no longer just one person. You have the tools to do this. So simple focus, niche client base, and have one or two solutions, no more than that. Once you get big and bold, absolutely you can expand from there, but get it started and keep it as simple as possible.
Okay, very helpful. Yeah, it's interesting. I know Josh Brown spoke about it. He's, find that ICP and just really focus in on it. And we've seen it. Like one guy we just brought on only goes after manufacturing reps and has built like a very impressive book. Or like I think Josh used the example of a guy in Nebraska only going after farmers in his region. So I guess, yeah, focusing on the ICP and not creating that complexity.
Absolutely. Yeah. Because again, then all of a sudden your processes become the same, the same proposal, the same financial plan, the same asset allocation, the same, because it's all the same client base. And now you don't have to replicate any of that. It's just, hit the button each time. And that's also the power of having that niche focus going forward.
Okay, wonderful. Well, Tim, I really appreciated having you on the conversation today. For anyone interested in yourself or Nexus, what's the best place they can find you?
On the website, nexus-strategy.com or on LinkedIn. It's all easy to find. As they say in Colorado, the coach there says, I ain't hard to find. So that's probably the best way to do it.
Okay, wonderful. All right, Tim. Yeah, we'll leave a note in the show notes as well for anyone interested in learning more.
Great. Thanks so much for having me on. Great podcast. Big fan. So thanks again.
Thank you, Tim. All right. Take care.